as far as the housing deficit is concerned, and also the issues that we've been having. But the perfect thing is that, as my brother here has said, that one of the major issues why we have had a dull mortgage market was because of the setup of the mortgage market itself. To say that if you have a financial institution that is just depending on deposit taking, you cannot trust the patterns of Ugandans who are saving with you to get off their money in 2 years, and then you give Harold a mortgage for 11 years, because it does not work like that. So you need an external force in terms of a refinancer or a pre-financer to flow. But they could not enter the market because there was no legal regime to govern the transactions. So that law coming in to say that the Bank of Uganda will come in to license them, to set the minimum capital, it's now I think 35 billion in the Act, and shape up the market. It's a very big plus to the market, and it will be a great addition towards solving the problem, of course, in light of the other factors that affect the mortgage market.
I love that you give the bittersweet taste to it, the why it's not a golden bullet, but also how it is revolutionizing the market. I know Housing Finance Bank has been providing some of these mortgages, John. I come to you on how is this law going to change the way you do business? Because I know that many of Ugandans cannot afford the mortgages. The long-term capital that Barija was talking about are not very much available, because we save in most cases to be able to utilize it in the shortest way possible. Let me keep my money in the bank. I'll get it after 6 months. I'll get it after 1 year or so.
This is a very big opportunity for Uganda. In fact, I'll start with Vision 2040. Where the government is very intentional on having a tenfold growth strategy. And starting with the real estate sector, the contribution is still very low at about 5%. Now, these regulations come in handy to impact the different areas within the real estate sector. I'll start with the banking industry. First of all, we know there's been a challenge in the market for years. The mismatch between short-term and long-term lending. Mortgages are usually long-term. Now, when you look at the deposits we mobilize from customers, it's usually short-term. So when the customer is interested in taking on a mortgage for 20 years, for 25 years, we know the rates are high. It's double-digit, and it's largely driven by the cost of funds in the market. The cost of funds is still high. So the mortgage refinance institutions are going to come in with more affordable funds, and it's going to be regulated by Bank of Uganda, meaning that mortgages are not going to be only for the high-income earners, the urban dwellers. It's going to cut across, and it's going to spark growth and development across the country. So even our brothers and sisters far from where we are sitting today, they'll be able to access these products from the financial institutions at much lower rates, because banks are going to be able to access long-term funding from these institutions that are regulated by Bank of Uganda, and the end user or the borrower will access these loans at much lower rates. So everyone is going to be included within the mortgage financing business.
Okay, let me come back to Wilberforce. Do you see this law regulating the actual problems, or is it just dealing with the financing system or the financing idea to it?
Thank you, Mary. This law is dealing with one of the biggest challenges of real estate. The biggest bottlenecks to affordable or cost-friendly real estate development is one of the biggest is access to finance. And this law is helping to bridge the gap between access to development capital by the investors, but also access to a normal Ugandan to acquire money to finance their real estate. So I would say this law is meeting the biggest need that has been a bottleneck to the real estate development. Because when you look at the real estate development cycle, from the planning to actually putting a product on the market, it is all financing end to end. And you see that now you've been needing a huge deposit on the, I'll start with the side of the consumer of real estate, the buyer. You've been having to deposit a huge amount of money to start up your loan, maybe 30% to start up your mortgage. If we get such a law and we have access to cheaper capital, meaning we will have a smaller deposit required upfront before taking up the mortgage. We will have a longer repayment period, but also we'll have a grace period now when it comes to the investors. What has been happening is that even if you took a mortgage today, you will start to repay back the loan immediately. Yet the project will take about 2 to 3 years to construct.
You're right.
But now with the refinancing institutions coming on board, we'll see that we'll have a grace period to when we start paying actually for the mortgage that we took. So I think this law is addressing the main bottleneck of real estate development, which has been finance. It is not the only one, but I think it has been the biggest bottleneck, both on the developer side and on the consumer side. And I think we now have a gateway to that.
Barita, while we're talking about gateways, there is always the legal catches that probably people do not pay attention to, and we get excited about the bigger problem, like Wilberforce has said. Yes, it is about money, but is it just that at the end of the day? What if there is failure on one end of the bargain and the law catches up with you? As we get excited, as we drive into it, what are the key concerns we need to pay attention to on the legal side?
Thank you, Mildred. The mortgage market is influenced by three things: the commerce, the law, and the market. The commerce on the side of what they have been talking about, to say, if I'm a bank, what do I need to pull off this mortgage arrangement with my end user, and also to deal with maybe a refinance. The law, in terms of what is the regulation, in terms of the obligations of the three parties, the refinance, the lender now, which is the bank or the SACCO, whichever can get a refinance, and then also in terms of the end user, the borrower. And then the market, how is the market ready to take on these projects and these products that the banks are designing? Weber has mentioned something very important about how the market, the bigger bottleneck was financing, but it's not the only one. We have, while we are talking about a deficit of 2.4 million housing units, the major problem being, he talked about the financing, but there's a high interest, there's a land issue, there's the lack of the grace periods, the illiteracy, it's too much. But what this law comes in to do is to say that if a refinancer wants to enter the market, who is governing them? Bank of Uganda says we are here, and these are the requirements. You are supposed to have a minimum capital requirement of this much. We've talked about that. 2, we have requirements for a license. What are you supposed to be doing? And then the requirements of making sure how you use the money that you've already put in this market. They for example, forbid, one of the clauses forbids a refinancer from directly lending, bypassing the banks to directly finance an end consumer, because they also want to protect the housing finance bank and the other institutions in the market from, because a mortgage market in a first world is one of the major players. You cannot play around with it. So if you do not have a regulator that is able to try to stop people who want to play around, or people who are entering the market for financial gain instead of stabilizing the market, that's where the danger is. So this law comes in to regulate the refinancers who want to enter the market, and the banks who want to get these to these institutions to benefit from these products. And then the beneficiary, the biggest beneficiary, actually who has no obligations in this act, is the end user, because it is regulated by other acts, the Contracts Act, the Mortgage Act, it's a lot, but specifically this act comes in to just govern the relationship between the refinancing institutions, the MRIs, and then the financial institutions. Okay. And it covers all the gaps that could be there for licensing, for doing business, and for fines as punishment, including withdrawal of licenses if you mess up, including fines up to a lot of money that if someone faults the rules under the Act, can fall to.
This is where I would go to John. It's like opening up the market entirely, and you've sort of been a monopoly, for lack of a better word, as Housing Finance Bank, for the good reasons when it comes to mortgages. Does this make our mortgages more affordable? How are you opening up to the market? How are you benefiting from the law, basically, in the perspective of a government bank that is providing mortgages?
First of all, I wanted to clarify, we are not monopolies. but we are the market leaders
Okay.
as per the customer's voice.
I love the choice of language, but it's okay.
Yes.
Yeah.
So clearly, this comes in handy. Funding is a major contributor, just like Harold said. If you take care of the financing, you take care of the regulations, you take care of the professionalism, there are several things in